Good morning, it's Monday the 6th of December and welcome to Atlantic Capital Markets roundup of the coming week's economic highlights to keep an eye out for. As always, we'll start with a quick summary of the key macro data points coming up this week in the world's markets, and we'll then take a look in more detail at some of the bigger stories straight afterwards. So, straight to business. So let's take a look at the economic numbers being issued this week. And starting today, we'll be hearing the latest German factory orders and the construction PMIs for the UK and the Eurozone. On Tuesday, we'll hear the latest Germany ZEW economic sentiment and the Q3 third estimates of the EU's GDP. And finally, Australia announced its latest interest rate decision, something that we'll discuss more about in a moment. On Wednesday, it's also Canada's turn to announce their interest rate decision, and we'll discuss that as well in a moment. Japan releases its latest GDP figures, and as usual, the EIA crude oil inventories. It's China's turn on Thursday to let us know how inflation's faring over there as they release their CPI and PPI figures. And finally on Friday, we'll hear the latest GDP growth numbers here in the UK. Also the German CPI figures, the US CPIs, and that's something we'll look at in a moment, and the US Michigan consumer confidence. And the companies that we'll hear updates from this week are as follows. On Monday, we'll hear from Victrex. On Tuesday, British American Tobacco gives us their year-end trading update, and we'll discuss these in more detail shortly. Also, we'll hear from Ashtead, Babcock International and Ferguson. On Wednesday, property developer and house builder Berkeley Group releases their interims, and that's something that we'll talk more about in a moment. It's also the turn of SPP, TUI and in the US, GameStop. And finally on Thursday, we'll hear from First Group, Moonpig, in the US, Chewy and Costco. And Thursday also sees the release of a trading statement by Rolls-Royce and half-yearly results from British multinational packaging business DS Smith, both of which we'll also discuss in more detail in a moment. So last week, Fed Chair Powell turned noticeably more hawkish, retiring that word transitory when referring to inflation. His shift in stance came as a new strain emerges which could evade existing treatment. The markets will be watching developments surrounding this new strain closely, and over coming weeks we will establish just how concerned we should be. Central banks are also back in focus, with the Reserve Bank of Australia and the Bank of Canada due to announce their interest rate decisions as well. So on that note, let's take a look at the key stories this week in more detail. So on Tuesday, it's Australia's turn to announce their interest rate decision. However, the Reserve Bank of Australia is not expected to move on monetary policy in the final meeting of 2021. Since the last meeting, data revealed that the Australian economy contracted in the September quarter. Lockdown restrictions resulted in a 1.9% contraction, the third largest contraction on record. However, there are already signs of recovery, with jobs growing and spending rising. The RBA is widely expected to raise interest rates in Q1 2022 from 0.1% amidst rising inflation on the back of surging energy prices and supply chain disruptions. Now, whether the RBA can proceed in this manner depends on, of course, the new virus strain and whether more lockdowns are needed. The Australian dollar has fallen sharply over the past week as risk sentiment falls. So also on Tuesday, British American Tobacco is due to give a year-end trading update. The stock trades down around 7% across the year amidst concerns that the US could pass legislation reducing the amount of tobacco allowed in cigarettes to levels which aren't addictive. Now, whilst this has put some pressure on the share price, the reality is that the focus is much more on next-generation products and how that side of the business is faring. In June, BATS said that it was increasingly confident of reaching its £5 billion target of new category revenue by 2025. The firm also upgraded its constant currency revenue growth to 5% from guidance of 3 to 5%. On Wednesday, property developer and house builder Berkeley Group are due to release their interim results. The company delivered on its full-year target back in June. However, with new reservations and forward sales declining, investors will be keen to see if the trend has indeed continued. Now, back in June, Berkeley noted that inquiries in the key London market had increased to above 2019 levels. So have these translated into higher reservations and sales? Also, let's not forget that government incentives are also winding down, which could of course hurt demand. Other headwinds include surging input prices, and also supply chain issues and input cost inflation could of course hurt trading. The share price trades flat over the past year, although it has risen 7% over the last month. Wednesday also sees the turn of Canada to announce their latest interest rate decision. Now, the Bank of Canada caught the markets off guard in its last monetary policy meeting by ending its quantitative easing program. The BOC Monetary Policy Committee believes that inflation will continue to rise over the coming months, but before easing back to the 2% target by the end of 2022. The October CPI inflation rose to 4.7%, up from 4.4% in September, and that's over double the Bank of Canada's target rate. The central bank is not expected to raise interest rates at this meeting. However, investors will be watching closely for clues over what the BOC have planned for 2022. Current expectations are that they may raise interest rates in the second half of 2022. So as a result, do keep an eye on Canadian dollar crosses. Rolls-Royce is due to release a trading statement on Thursday as the outlook for the share price has changed dramatically over the past week. The emergence of the new variant, in addition to travel bans as governments try to restrict the spread, mean that the aviation sector's recovery could be knocked yet again. Before this latest development, the outlook for Rolls-Royce was improving as customers were taking to the skies and airlines were ordering new planes. These latest travel bans will be a setback, particularly given the uncertainties over how long these bans will last. Rolls-Royce may have to revisit its earnings projections for 2022. Rolls-Royce has implemented measures to reduce headcount and cut costs. In its H1 report, the company said it was on track to make a further £1.3 billion of annualised cost savings, which will help the firm in these increasingly uncertain times. Box maker DS Smith is likely to report strong demand across the first half of the year on Thursday, as the e-commerce boom shows few signs of slowing. So the big question is whether rising costs will start eating into profits. DS Smith highlight inflationary pressures in its most recent trading updates, so this will be the first time that we see its real impact. Management have said that they will pass on these increased costs to the customer. However, this could of course take time, producing a lag between rising costs and passing over to customers. Net debt will also be in focus. It has been on the rise since the Europac acquisition. But the stock trades up 8% over the past year and down 12% over the last 6 months. Finally, on Friday, the release of the latest CPI figures in the US will ensure inflation data is likely to be the key focus this week. Consumer prices rose at the fastest pace in 30 years in October as inflationary pressures spread through the economy. Rising energy prices, labour shortages and supply chain disruptions sent inflation to 6.2% and also prompted a more hawkish turn by the Federal Reserve. CPI inflation is expected to rise further in November to 6.7%, with core inflation rising to 4.9%. The Fed's target level for inflation is, of course, 2%. Another jump in inflation is likely to heap more pressure on the Fed to taper its monthly bond purchases at a faster pace. Last month, the Fed reduced the $120 billion monthly bond purchases by $15 billion. So, of course, do keep an eye on the US dollar and all US indices. So, that is all the big stories in detail. Let's wrap up with a look at the dividends due this week. In the FTSE 100, we'll hear from Intermediate Capital Group. And in the FTSE 250, XP Power, HomeServe, Investec, Lion Trust Asset Management, Redden Northgate and Assura. So, those are the highlights coming up this week. If you're a new viewer of our regular videos, why not click on that subscribe button just to make sure you don't miss our regular market updates. And just as importantly, our special market analysis videos as soon as they're released. And of course, if you're interested in the markets, do let me remind you about our app, which you can download from the App Store to your mobile phone. And this app gives you a whole host of useful functionality as an investor. So until next time, from all of us here at Atlantic Capital Markets, have yourself a great week.